Hi, I'm Todd Rosenbluth, Head of Research at Vetify. Thanks for joining us for another episode of ETF 360. Today, I'm joined by Katie Stockton of Fairlead Strategies to talk about a tactical ETF, TACK. Katie, thanks for joining me.
Of course, good to be with you.
Well, it's my pleasure. So as mentioned, your ETF and your focus is on technical analysis. What have the charts been telling you about the first half of 2022?
Well, it's the first real bear market cycle that we've had in some time. It harkens back, unfortunately, to 2008 based on our work. We have the worst long-term momentum that the S&P 500 index has seen since that environment, and prior to that, since the 2000 to 2002 downdraft. So to us, it's really a bear market cycle that's still intact, even with the relief rally that we've seen. With that loss of momentum, of course, we saw a series of breakdowns earlier this year, and really just a very difficult tape because it was so top down in its orientation, meaning that most stocks participated on the downside, and that makes it more difficult, of course, for investors' portfolios and also for idea generation.
So when you look at the market from a top-down, your perspective, technical analysis perspective, are you looking top-down at the broader market? Or are you looking at individual sectors, or a combination of both?
It's a combination of both. I mean, we start top down by looking at the major indices in the US and beyond. We also look at what we consider to be macro technicals, things like treasury yields and crude oil prices. And then we drill into the sector relative strength work, which is to us very essential for the market, in that it's probably the best way to understand where the leadership is coming from, both on the upside and the downside, and also probably the best way to outperform the benchmark. So if you're in the right sectors of the market, you just have a better chance of leveraging upside or downside depending on your goal. So we do spend a lot of time on that sector relative strength work. And we also do what we consider to be bottom up work. And for us, that means looking at a lot of individual stock charts and making sure that what we're seeing there is aligned with and supporting what we're seeing from a top down perspective, because it is a market of stocks, of course. And sometimes the S&P 500 is so swayed by the mega caps that it really doesn't tell the full story of the market.
So you look at the market from both a risk on and a risk off perspective using ETFs. What are some examples that fit into each of those categories?
Well, we tend to use the sector ETFs, specifically the sector spider ETFs, to leverage these sector relative strength trends. And that's most applicable in what we would call a risk on environment, which is usually when the equity market or the market indices are trending higher. That tends to be risk on. Of course, there are periods during bear market cycles like this that we have a brief move to risk on, but overall, we want to stay on the right side of these longer term trends. And when the market is trending higher, we do try to leverage it through the use of those sector spider ETFs, or really any kind of thematic type of ETF. Anywhere where we can find some upside leadership and outperformance tends to come from what we consider to be the more offensive sectors or higher beta sectors of the market. And of course, then in a bear market cycle or a downtrending tape, we tend to get more defensive sector performance. And at times, depending on how bad the equity market has gotten, we are inclined to move into different asset classes. And for that, we're using ETFs representing short-term treasuries, long-term treasuries, gold prices, and similar assets that have less of a correlation to the equity market. And therein, we can at least find a place to hide in these kind of downdrafts. And for that, we're also using some of the State Street funds in our work.
So this all comes together through the new ETF that launched this year, TACK. Tell us just how that all comes together.
That's right. It's called the Fairlead Tactical Sector ETF. My company is Fairlead Strategies. We're also a research and consulting business, and we're really known for our technical analysis research. And with that, we came up with a methodology and a technical model that became the basis for TACK or TACK, which is a systematic approach to sector rotation. So as mentioned, in an uptrending market, we're trying to leverage that trend by being in the sectors that are outperforming. And that's exactly what TACK is designed to do for us, to identify the sectors with the best momentum and also the sectors that lack any big overbought sell signals and have the best relative strength, meaning relative performance versus the broader market and versus the other sectors. We also apply sort of a quantitative momentum overlay too when we have too many sectors qualifying for the portfolio. So we're trying to find really the best of the best on the sector front. We equal weight the sectors, filling 8 buckets. So we'll choose 8 out of the 11 economic sector spiders to fill a complete risk on bucket. Now, for those times when the market does move to risk off mode from a long-term perspective, those buckets will sometimes be filled by the other asset classes. So we're using GLD, which is the gold ETF. It's a way to invest in gold commodities, or gold, the commodity, not gold, the stocks. And then also SPTS, which is the short-term treasury exposure, and SPTL, which is the long-term treasury exposure. So it's really an ETF of ETFs. And the design is to have that systematic approach to technical analysis to make sure that the portfolio is appropriately moving between risk on and risk off via those sectors and via the other asset classes. And that's what it's already sort of done this year. The inception date was in late March. And of course, that was a very difficult time for the S&P 500. So it had to prove itself in that kind of downdraft, and it really outperformed the S&P 500 as it went lower, bottoming in June. And that to us showed that it was appropriately risk off at that time.
Well, that's great. Thanks for sharing insights about the new ETF, TACK. Thanks for joining us, everybody, and listening in. Till next time on ETF 360, I'm Todd Rosenbluth. Have a great day.